everyone, and welcome to Pearls of Fisdom with Nirmal. I'm Avan Dabash. Today, I'm talking about a company that's at the forefront when it comes to hospitality and travel. It had its beginnings way back in 1881. This is Thomas Cook India. In fact, it's one of the leading omni-channel travel companies in the country, and there's a broad spectrum of services from foreign exchange to corporate travel, leisure, visa services, value-added services, and so much more. So we want to understand a little bit more about their long-term game plan, their financials, as well as what the triggers are for growth. We have Mr. Mahesh Iyer. He is the Managing Director and CEO at Thomas Cook India. Thank you so much for taking time out and joining in. Let's start off by just discussing a little bit about the overall travel landscape in the country, because clearly there has been that big boost within the hospitality sector, lots of tailwinds. How is it that you are placed at Thomas Cook to benefit from this?
Thank you, Avan. Thank you for having me on the show. I think to begin with, I would say the tailwind that we saw coming out of the pandemic has been very, very strong, not only for Thomas Cook, but the sector as a whole. I think some of the factors that are helping us grow is clearly the appetite of customers to travel. They all believe in the now and here, which is more to say that I don't want to keep saving for a future, which I'm not sure is certain anymore. Hence, I want to save and spend today. Third, availability of money. And I think India as an economy has moved from just being a savings economy to more like a credit economy too. And availability of capital. Today, I think the credit explosion has happened in India. People are willing to take that extra money either on their credit card or through an EMI or through a loan to fund their holidays. And all of this is music to the industry that we represent, because we operate a discretionary category, and more money in the hands of people means people are willing to travel, and travel is experiential, and that's the place that we place ourselves very well. So yeah, the tailwind is helping. As a company, I think we've had a very great run after the pandemic. If you look at FY24 that went by, we recorded our highest ever profitability, PBT of 345 crore as a group, and that's the highest ever that we've recorded. And if you look at the Q1 results for FY25, we had another great quarter. We reported a PBT of about 107 crores, representing a 17% growth over a comparable quarter last year. So yeah, it's been a good run, and we expect this run to continue. And as you rightly said, tailwinds are strong. Appetite continues to be very, very strong. And with a lot more holidays coming in, I would expect more people to travel.
Sounds good. And what about the outlook then on your overall quarterly performance? How do you see your net profit growth? What's the sense that you're getting when it comes to revenues? It was at about 750 crores in the quarter gone by.
So, Avan, if you look at the quarter that went by, our actually grew 11%. And if you look within that, and the travel segment actually grew by about 15% in that. And that's fueled by the fact that our holiday business showed a very strong growth of 21%. Our domestic business grew by about 35%. And the B2B businesses grew by about 12 to 15% in different segments. So clearly, we've had a strong growth all around. And we've guided the market to a 12 to 15% growth in our income from operations for FY25. We've also said that given this kind of growth that will happen in the income, and we've done a lot of transformation in terms of our costs. We've done a lot of digital initiatives that have put the company on a different pedestal. We are no more investing too much in people. We have replaced a lot of hands with technology that not only helps us bring efficiency to the customer, but also helps reduce the friction in a transaction, which only allows us to be that much more efficient in the market. The net impact of that is that you will see an expansion in margin. We've guided the market EBIT margin for the travel business of close to about 4.5% to 5%. We expanded the margin about 40 basis points in the current quarter, and I expect that expansion to continue. Overall, the company had an EBITDA margin of about 7.6%, and I think that's been a stable set of numbers, despite the fact that there has been some softening of rates both on the airline side as well as on the hotel side. Despite that, we are holding our margins. And I think there's a lot more that's going to happen in the Indian context. And we've remained very optimistic about the growth in the coming quarters.
Okay, that sounds good. Optimistic about growth in the coming quarters. That being said, then let's talk about the individual segments as well, in terms of how you're looking at the Forex growth as a part of your business, and how do you see that really scaling up in terms of growth in sales, retail?
Sure. So, one, if you look at our Forex portfolio, we're one of the largest Forex service providers in this space, and I'm not including the banks to count amongst them. And we focused on travel-related foreign exchange. We do remittances and we do students. In each of the categories that we represent, we are a market leader in that sense. Now, this business is a scaled business. We do about $3.5 billion of top line volumes every year. This will grow at about 6 to 8% year on year. But the business income that we generate out of these volumes will grow at about 10 to 12%, and we expect that growth to continue over the near term. If you look at the EBIT margins on this business, we do about 41, 42%. Our guidance to the market is at about 45%. This quarter was an exception. We actually did about 52% EBIT margin, but I think I will call that out more as an exception than a rule. But our guidance is more to a 45% EBIT margin, and the business will continue to deliver that kind of growth over the medium term. Now, some of the factors that are leading to this growth is obviously our focus on the prepaid card. We run the prepaid instrument in this market. We are issuers of it. We work with both Mastercard, Visa, as well as RuPay, and we've understood the customer segment quite well. So we have an enterprise card that's focused on the corporate segment. We have a study buddy card that's focused on the student segment. We are soon to launch a travel card that will be focused on the travel segment. So we are customizing the product to meet the needs of the customer rather than a one size fits all. So that's working well for us, and that will drive a lot of growth. In terms of our portfolio, we have a strong B2B portfolio too there, where we work with a lot of mom and pop stores who are travel agents, who are education consultants, who actually refer their students to us and they buy their foreign exchange services from us, apart from the corporate and the retail customers who are inherently buying holiday packages from us. So I think from a holiday portfolio, we will see a 15 to 20% growth in our portfolio. From a student portfolio point of view, about 600,000 students travel every year out of India. Thomas Cook has about 8 to 12% market share. We expect that to grow to about 15% in the near term. So clearly, these are some of the growth engines, growth drivers for the business. We also fairly entrenched in the airport side of the business, but over the last 2 3 years, we've only focused on tier two and tier three. We're not present at all the tier one airports. Albeit Delhi and Cochin, we are still operating out there, and very soon at Bangalore Airport too. But our focus has been on tier two and tier three because there's a lot more connectivity. A lot of international aircrafts now fly out of tier two towns too, and that's the point of sale where we want to be actually present. So overall, the forex business, to sum it up, will continue to grow at about 10 to 12% with an EBITDA guidance of about 41 to 45%, and you will see a 15% growth to the bottom line on this business. Coming to the travel segment, there are two parts to it. There is B2B and B2C. B2C is largely the holiday segment, which is represented by the brands Thomas Cook, SOTC, and our operations in Hong Kong. We've seen double-digit growth and high double-digit. When I say high double-digit, we are talking about 22% growth. And that's also coming out of the pandemic, so there is a bit of a tailwind that's playing out. But we expect this to even out at about 15% in FY25 or so. But there is a lot more that will come out of the B2B segment because the B2B segment is currently underpenetrated. Some of the businesses that we have overseas were loss-making or break-even in 2023. We expect them to start converting to profit in the current year, and that will lead to the expansion of margin. If you recollect, I just mentioned we guided the market to a 4.5 to 5% EBIT margin on the travel segment. We are currently at about 3.8. Notably to mention here, in the current quarter, our margins improved from about 3.4 to 3.8. That's a 40 basis point expansion in one quarter, and we expect that to hit the 4.5% mark by the end of this year, fueled by the fact that some of our DMS operations, which were break-even or loss-making, will come back to profitability. And there is a lot more in terms of integration benefits that we are deriving because of the common buying that we are doing with SOTC, Thomas Cook, and some of our group companies.
Right. What about Digiphoto? What kind of growth potential are you seeing here within this segment?
So, Avni, this is a bit of a unique space for us. If you look at Digiphoto, it's one of the top three photography company in the world. It does a top line of about $125 million plus or so. And it's got about 250 plus partnerships. We have an average renewal rate of about 90 to 95%. It's more like you walk into any of the parks in the Middle East, you will find people sitting down there to take your photographs. You are enjoying a ride, and there's a roving camera that's capturing different moments. So this is more like an experience business adjacent to travel. and we believe there is a lot more in this business to do. What we are currently investing in this business is technology. While this is more photography, this is technology driven. There's a lot of association that needs to be coming across on this business. It's more like when you enter a park, there's an FR technology that's in place. It captures your images, and then at every ride that you do, it can keep throwing these photographs on your phone and then ask you to choose what you want to buy. So we believe that's a great opportunity because it's not only capturing the customer while he's at the park, but you also have an opportunity to go to the customer once he has walked out of the park, capture some of the moments and tell him, would you like to pick some of these pictures as memories for yourself? The other thing that we are trying to do in this business is to do the pre-sale opportunity, because a lot of parks today are only focused on selling the tickets but do not embed photography along with it. So that's a great opportunity. We've tested that in some of the markets and we've seen some good success, and we hope to replicate that in other markets too. Last but not the least, the business was expanding. We expanded in new markets like Saudi. It's the thing that's happening. So we have expanded in the Saudi market. During the pandemic, we entered China market. China is showing good signs of growth. Albeit profitability on that is little low at this point in time because we are still getting our tooth fixed in. But I think a lot is happening in that space. We see this business as an opportunity of growing its revenue to about 12 to 15%, and the bottom line by about 20%, with stable margins at about a 8% kind of a net profit margin. So that's the kind of mix we have, built on partnerships, long-term relationships, and technology will be the key for the growth in this business.
What about the kind of pre-COVID volumes? How much in the holiday business in terms of a portfolio level have you recovered there?
So different businesses are at different level of recovery, Avan. If you look at the long haul, that's the only piece of the business in our portfolio which is currently subscaled, which is not recovered to the pre-pandemic level. We are at about 72, 75% at this point in time. Our expectation is that we may see a full recovery in FY25, and I'm using the word may because what we are seeing is also people's habits of traveling are changing. People are now more short haul driven. They prefer to pick up a destination that they can cover in a shorter duration. They like to do multiple trips. Unlike in the past, they will do one or two long trips during the year. Now they are taking multiple short trips. So my domestic portfolio is actually growing at about 30%. Short haul portfolio is growing at about 20%. Long haul still lagging, while it's growing at about 8 to 10% as compared to what we did in 2023. But from a volume perspective, they still need to catch up on the 2019 numbers. And that there are multiple reasons to it. We didn't see that growth coming in the quarter that went by because that was a quarter of elections. We also had warmer summer all of Europe, so people didn't prefer some of those destinations. But when I look at our winter bookings coming in now, I see a fair bit of momentum coming there. Our expectation is that while the overall portfolio will be higher than the pre-pandemic, there will be some change in the mix of customers or the travel portfolio that they take. But yeah, expectation is that FY25 should see a full recovery for the long haul segment too.
Good to know. And what about your outlook in terms of how you would like to see the company capitalizing on the strong boost that we're seeing on domestic tourism in particular? You've also had, religious tourism, which has taken a big boom. There's been strong government vision for tourism over the next 5 years. How is it that you're seeing Thomas Cook capitalizing on all of these factors?
So, Avan, I think domestic as a portfolio did not exist for Thomas Cook prior to the pandemic. We were a marginal player, and I will call it that way. Because India is a very vast market. Even if you touch 1% of the population, I think it will be a huge number. And that's the opportunity we are trying to size. We are nowhere closer to that 1% mark even today. So yes, opportunity is very, very large. And given the space that we operate, the landscape that India is, it's a very difficult terrain. You can't be relevant in all the markets that you operate in. Hence, we have chosen the states that we want to play. So our category that we play is honeymoon. We do some adventure. We do religious tourism, but that's currently focused on Char Dham, some part of Ayodhya, obviously. And as you rightly said, the government is focusing on religious tourism. So we are building some of those circuits that we can sell to our customers and garner some share out of them. But I think if you look at the portfolio, and this I think will be true for the entire industry, the top selling markets continue to be Kashmir, Northeast, the hills, Goa, Bhutan. I think these are some of the markets where you see a lot more customers traveling on the domestic circuit, while there are others like Gujarat, Kerala, but they don't feature too strong, or they don't have large number of people coming there. And you must also appreciate the fact that when you look at domestic as a category, it's more like I know my backyard very well. So people do not prefer to actually come through a travel agent. So you actually end up splitting the product in components. And that's not a space we like to play. We are more like an experience provider. We sell package holidays. And we want to bring that experience to the customer when he gets into a destination. And that's what we are focusing on. So, yes, there's a lot more room on the domestic space. There is a lot of work that we are doing there. We are creating new categories for bikers. We are attracting the young millennials into our audience. Our average age group has fallen from about 45 to 35 today. So there's a 10-year shift that has happened post-pandemic into our age group of customers who travel with us. The buy now, pay later category is actually booming. People are willing to lend that extra money to make their holiday dream come true. And I think all this kind of helps businesses like the travel industry, the hospitality industry, to capitalize on the boom that we are seeing.
All right. And what is the outlook then as well on leveraging technology? You guys have now got an AI-enabled product. Just a quick word on that.
So, Avan, yeah, we've done two parts on the AI part of it. Today, what you see is people talking about DIY, and which is what a lot of technology tool provides. But India being a market which is more like DIFM, which is do it for me, we wanted to find a sweet spot between how the customer gets the feel of he having created that holiday with us. Co-creation is the model that we are going with. We're enabling the customer to pick and choose the kind of various components of his holiday. We bring the element of effective pricing because we have got economies of scale that work at the back end, because we are integrated as a company at the back end, multiple geographies, multiple businesses buy different kind of contracts at different points in time. We are putting all of that together and putting that product out there for the customer to kind of navigate it for himself. We are also looking at AI to improve some of our back-end processes so that the customer connect and the friction that he goes through in a transaction is reduced to a large extent. So yeah, we expect this product to be hitting the customer to test and play for somewhere in Q3 of FY25, and from there on build on this journey. There's no end to AI as a product, because there is so much more that we will keep doing, and AI as a product keeps learning and enrich the experience for the customer over a period in time. But clearly our focus is to convert conversations to make it conversions, and I think that's what we are trying to focus on.
Before we let you go, any pearls of wisdom that you may have, being in a fairly competitive space that's growing so much, that's seeing a lot of demand, any advice? Pearls of wisdom?
I would say you should always know the space that you don't want to play. Yeah, I think that's the lesson I learned in the pandemic very clearly. You know what you don't want to do because that's not your core competency. Focus on your core competency, do it well, and do it, foolishly so well that you can wake up in your sleep and say, this is what I do for a living.
I love it. Thank you so much for taking time out and giving us a view on the overall business, and good luck for the future.
Thank you so much, man. Pleasure to speak to you.
Pleasure.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.